What is going on, everybody? And have we reached a turnaround point? I know there's a lot going on, and I've been talking about a lot going on in the market lately. And the biggest thing to see here is that we pulled all the way back to the 50 EMA of the daily on the SPX. Leading up to this point, we had the FOMC meeting notes, we had jobs report, a lot of stuff that was looking, well, not just looking, but the way the Fed came across is very hawkish as in terms of rate raises, and then getting conflicting data with jobs, essentially saying that the market really wasn't ready for uh, the Fed to just start withdrawing purchasing of assets and helping the economy in general. So coming into today, one thing that was very interesting is we did sell off first thing in the morning. Let me actually pull this up on the hourly. Coming into today, we did sell off very hard, but we did hit the weekly support, the 20 EMA, and we bounced pretty good out of that. And that's probably one of the biggest bounces we've seen in the past couple days. Now, being said, there are leaders. Kathy Woods came out on Friday and she talked about some data as well coming in the retail space that's numbers and estimates are way lower than expected, especially for Christmas. And so, being said, you saw that in Amazon and Shop have taken a massive beating out of big tech. Those two have really uh, taken a beating on this last pullback for big tech. Now, a lot of big tech is at least taken a 10% hit on all big tech. Being said, the market, the SPX, has almost hit 5% coming into today. And so, being said, that could be a big enough correction. Last year, the biggest, we didn't even have a correction last year, but the most diluted correction we had, or pullback, I should say, was roughly around that 6% mark. So, being said, even the rate raises, I'm expecting a somewhat of a correction around that point. Again, there's the market is still very bullish, and the Fed is still very, even though I think they're pretending to put up this front of being hawkish, I think they still really don't know, and they have a lot of lingo in their meeting notes and everything, essentially stating that they aren't really sure that there will be a rate raise this year, but as far as how quickly they're going to go about that, I think can be misleading. I think a lot of people assume that they're just going to do 4 rate raises. They've talked about it. There's a possibility of that happening, but I think they have to go at it very slowly. If they go at it too fast pace, it could be detrimental to the growth of the economy. So they can't just come out here and start throwing rate raises down and assuming that the market is going to be okay with that. But this is, I think, ultimately the digestion of the FOMC meeting notes. We do have Powell tomorrow in front of the Senate, essentially talking about his nomination. And so there could be a possibility of questions that come up about rate raises. And ultimately, I think what people will be looking for tomorrow is a time frame and when that will be. We are hearing March, which is when I was expecting the correction. Now that we got this very hawkish notes last week, the market just took a dive because it didn't like the way that the Fed were just going to attack it. Again, just initial digestion. They try to price some of that in case that does happen. But I think ultimately what's going to happen is these 4 rate raises this year, I don't think are going to happen. I think we'll probably get about 2 this year, possibly 3. It really just depends. There's a lot that comes into play here. And again, if the Fed comes at it too hawkishly, it's going to be an issue. So the market in general, it made that massive move up. Well, ultimately, we want to see is this wedge break tomorrow. If we do break this wedge, I'll be actually looking for calls on this. Again, I don't think anything really coming from Powell tomorrow. There's going to introduce some volatility tomorrow, but I don't think there's really anything that's going to come of that that's going to push the market one way or another. The market is very strong. Something I've talked about, it's very strong, but we have to get past this rate raise, and we have to figure out when this time frame is. Once we figure that out, the bigger players in the market will start to focus on their moves that they're going to make for the year, whether that be growth or with value. And we've seen a lot of growth. We've seen a lot of banks really push. Now we're seeing value and banks pulling back and growth starting to take the lead again, which is very good. And ultimately, it's Tesla and Google are really leading right now because they do extremely well under the conditions. We're seeing other companies like your Amazon is taking a bit of a hit because of the way the market is. And then you also have, with chip shortages, hasn't affected Tesla. They were creating their own chips. Google essentially bases off of ads. A good chunk of their stuff comes from ads. So being said, they're in, they have the cloud and everything else. They have a lot of different elements that are helping them out through essentially this pandemic. And so moving forward, we have to see where the money shifts. I think the growth right now, you do have your Tesla and your Google, I think, are going to destroy earnings. I think they're going to be the biggest winners out of this quarter because of the fact that Tesla already gave its numbers, ridiculous numbers on deliveries, not to mention everything else that they got in the pipe to essentially help them from the last quarter. And then you also have, again, Google, everybody at home for the winter times, the colder months, watching YouTube, watching ads, doing all that stuff for Christmas. So being said, I think Google always really dominates around this time frame. So being said, I think those two are the major ones I'm watching. Bitcoin took it's taken that massive hit. There was huge news about a billionaire, I think, that essentially took half of his net worth and bought the dip on Bitcoin, which possibly could have saved it. But Bitcoin is still very good. We talked about this over the weekly update. It could still dip all the way down to about, I think, we still got a lot of room here. We still can go down to roughly around that 33K mark, 32K mark, and still be bullish. We still got a lot of room. So I'm not really worried about this. Again, you want to test old resistance, come back. We're retesting some of that. We hit a solid support today. So if we bounce from here, that'd be really good and bullish into this year, 2020. I think, again, we're still very bullish. There's still a lot of money. And even though the Fed has talked about a lot of different things right now, which I think is kind of scared the market, I don't think it's really scared, but we want to take risk off in case that they do want to start getting very hawkish with these rate raises. But ultimately, there's still a lot of money in the system. And even if the Fed tries to figure out a plan to try to extract some of that money that they've thrown into the market, it's going to take a long time. It's not going to be as quick as one may think. Everything takes a couple months on end. So once all this stuff is figured out, once the people get a time frame, this will start to play out a little bit more. Going into tomorrow, I'm looking at Tesla. Tesla had a massive pop from the bottom today. Held very well. I'm actually swinging this. It looks like it's breaking over the 20 daily EMA overnight. Again, I think with earnings and the numbers, this is really going to start ripping. Now we're going to start getting that earnings run up. Big tech earnings should be at the end of the month. So you're looking around the 26th, which is during the Fed meeting. So being said, I think we're going to start getting that pre-market or that pre-earnings run up. We do have some banks other than weak. Next week we have Goldman Sachs and a lot of other big banks, and we got Netflix, I believe, next Thursday. So being said, there is a lot of earnings coming up, and we also got chips. We got ASML next week. Being said, that should lift chips as well, getting a catalyst and get the sympathy play if they do well next week. So we got to start watching these. Stuff is starting to run. It's perfect time. You're about a week out before we start getting some of these earnings. So I think we're seeing that earnings strength. I think is what this is. We're also getting a wedge break. on this, and we just want essentially Tesla to hold that 10.59 mark. If we can hold that tomorrow, I'm looking for this to attempt to go all-time highs again. So I'll be playing a lot of this going into earnings. Google as well. I think it just broke the wedge. I think with Powell tomorrow, we could get that volatility, like I said, so we could get another retest back down to this 27.37 mark. I'll be looking to buy Google around there. I think this will essentially butter a lot of these smaller speed bump supports, supply and demand zones up till that 28.55 mark. Once it hits that, I think we might actually gap up over that, to be honest. Google and Tesla, I think, are really going to lead this charge going into this earnings, especially with the numbers that have come out with Amazon and Shop. That doesn't mean that it won't run. You also got Apple, same wedge break you can even talk about here. Looks like we got another wedge break here. So Apple looking for a retest. This could possibly even come back down to that 170 mark. If it does, I'll definitely be trying to scoop up Apple at that point. But right now, I think Apple will just start turning and running. It doesn't typically do that. Apple's actually been moving pretty well for the most part, but I still like Tesla and Google a lot better. Amazon had a monster rip. Again, I think it's going to have some trouble. It's going to stumble over its own feet for the most part. Even this move up today was pretty choppy. Facebook is another big one that could do well. Typically, if Google does well, Facebook does really well too. They've been essentially held down from a lot of bad reports a couple months back and have never quite recovered from that. But it's been dripping. It actually dripped down to 315. I didn't catch the fact that it was down this low today. But something to watch. It looks like it is rejecting off that 200 around that 327 mark. Ultimately, if you can hold that 327 mark, you got a lot of resistance. You definitely want to try to break back over that 336 mark. If it does break over that, I can see this attempting going for all-time highs. I think once Facebook gets gas, we've seen that Facebook's wanting to go. I think once Facebook does get momentum, it's really going to rip. It's going to be one that's going to run for a couple of days on end, like it has been. It's been attempting to do anyway. Roblox, another one that's been really beaten down. I want to watch this tomorrow. I will get another position in this as well. I want to add into this. I really like Roblox going forward. They should actually be coming out with their monthly updates, which gives user usage and all that stuff as well. Sometimes that hurts it. Sometimes it makes it sell off more. So kind of looking for that, see if it does sell off because of that, and then look to buy the dip on that. Airbnb, a lot of these are really good prices. So if you're investing, you're getting a great opportunity for the year to be purchasing a lot of these different things. Airbnb is another great one. I think is at a good price. If you were lucky enough to grab it down here at the 152 mark, I did miss this one as well. A lot of stuff was coming down pretty quick. So I went after the ones I really cared for the most, typically Tesla, your Googles. Those ones are the fastest movers, and then look for laggards at that point. Also, Microsoft is a huge one. It's taken a massive beating. Really kind of looking for this one to start pushing. If this one does hold tomorrow down here, we'll actually probably try to grab some Microsoft as well. ASML is another big one I want to see going into next week. It did hit weekly support just like the market did as well. I want to see if it holds this 705 mark tomorrow. If it does, I want to get back. I want to get into this going into earnings. I want to try to get that earnings run up. I think a lot of these, again, are going to do very well. Chips, I think, are going to, along with Tesla and Google, are definitely going to be leading the surge here going into this quarter. UPST is another huge one. It's actually way down at 107. Again, another one I was not watching, but I want to watch this tomorrow. I do want it to hold this 107 mark, but I think it's in a really good position. It's well under the 200. Yeah, it might have gotten pumped quite a bit, but the numbers are still really great on this company. I want to try to get a solid position in this going into earnings. I think once earnings happens, they put up some ridiculous numbers. This thing is really going to start ripping at that point. Trying to capture the pre-earnings run up for this one as well, and see what happens there. Banks are starting to pull back. And NVIDIA is another one I might want to get into. Just really watching this particular level. It did break the solid support, the 268 mark. It is back over that. So I want to see if tomorrow, if we get any volatility, if it comes back into this and retests and holds that 258 mark, is another big one. I think, especially for chips, I think NVIDIA is definitely one you have to get on your board for that one. But that's pretty much what I got. I know this video is getting long for a daily update. There's a lot of information going on, so just be mindful of what's going on. Focus on 2 or 3 of the stocks. Like I'm not catching everything. I catch the ones I truly believe in, the companies I truly believe in, and then I go back and look for the laggers, and then pick those up and play those after the fact. So, but again, if you're investing, it's definitely a good time to pick some of these up. Again, the rate raise, I don't think we've already had a pretty good pullback, a good 5% pullback, and I think rate raises come around March timeframe. Probably figure out around the end of February for that FOMC meeting and determine when that the rate raise will come, if it does come in March. And then I think when that's actually takes into place, or the announcement of that, when that will come, we might actually get a correction, and then that would be the ultimate. I think that would be a good correction to buy, and then realize that there will be at least another correction later on this year. But I think that will be a little bit more strategic, especially depending on what happens with the market and the variance and the economy in general. So I'm going to have to see what happens. But if you've made it this far, remember to hit the like button and subscribe if you haven't done so already. And until next time, I'll see you guys later.